Hi, everyone. Thanks for joining and welcome back to Wall Street Silver. Joining us today is my good friend, the founder of Adrian Day Asset Management, the man himself, Adrian Day. How are you, sir?
I'm fine, thanks, Ivan. I keep laughing when you say the man himself.
Well, we got you here, and I really wanted to bring you on to talk about the silver and gold markets, all the excitement that's boiling up. And, a lot of people have been talking online about central banks. They're buying a massive amount of gold. There's so much turmoil in the world, they don't see an end to any of the wars stopping any soon. What do you see happening with gold and silver?
Yeah, well, first of all, no question that over the last 18 months, it's been central bank buying that has been the main support and overwhelmingly predominant support for gold. That's been what's driving gold. And if you look, frankly, at other indicators, other things that we have hard data on, like ETFs, well, I don't know what the data is yesterday. I apologize, but Monday, Tuesday, Monday, Tuesday, Wednesday, we had outflows from the GLD.
Hmm.
We've had net outflows this year of about $250 million. And of course, we had net outflows last year. So it's not ETF buying that's pushing the price up. It's not ordinary retail buying. If you look at coin sales, for example, in both Europe and in the US,
Right.
dealers that I have talked to all tell me that they've had a slight shift in the last month, but it's still basically flat, the difference between buying and selling. They tell me there is no rush to buy. There's very little net buying of coins.
Right.
And the premiums reflect that. So basically you look around and the only thing that we have hard evidence for buying is the central banks. Of course, the open interest on the COMEX has gone up, and it's gone up quite sharply in the last couple of weeks.
Right.
But those numbers themselves are not sufficient to account for the increase in the price of gold. So I think what we're seeing in gold, I think we're seeing, in addition to the central banks and the Chinese retail, I think we talked about that last time,
Yeah.
that's picked up this year as people in China are concerned about the economy, concerned about the banking system there. They're taking money out of the banking system. And where the Chinese typically or traditionally put their gold, put their money, their savings, well, traditionally it goes into the stock market, which is very weak in China. Might be a good buy, but that's a different issue. Most people would look at it and be a little concerned about the weakness. The
Right.
second place they put it is real estate, where if you're Chinese, you're going to be very cautious about putting money into real
Yeah.
estate now. And
After
the
all the
third place is
craziness.
gold.
Yeah.
So gold is the beneficiary of China. So we've seen central banks this year, particularly February, March, we're seeing a pickup in Chinese buying. And I think the other thing would be over the counter buying, so it doesn't show up in reports, over the counter buying by wealthy families and individuals in Europe, in the Middle East, in the Far East,
Right.
in Asia, who are concerned, as you said, they're concerned about not just a geopolitical situation, but they're concerned, I think, about the fragility of the financial system. You look at commercial real estate, for example, which, everybody knows is a problem, but in the US, banks and insurance companies, for that matter, are able to continue to mark these things at cost
Right.
until there's a default and they have to write them off. You look at Japanese banks, which have exposure, and German banks for that matter as well, but Japanese banks more so, Japanese and German banks which have exposure to US commercial real estate, and they have exposure in some cases to the very same loans, they're part of a syndicate. Well,
Hmm.
the German and Japanese banks have been required by their regulators to write the loans down and in some cases off. And the very same loans that the Japanese banks are writing down by 50%, the US banks are keeping on their books at 100%, and the insurance companies are keeping on. So I think it's a defer, delay, defer, which is the US way of doing things, right? Just kick the can down the road and hope it goes away.
Yeah.
But it's a problem, and I think that's what you're seeing around the world. Silver, of course, is a slightly different story. As I'm
Yeah, now we're starting to see silver pick up just in the past few days. People are saying it's starting to catch up to gold, or what do you see happening with silver,
Yeah,
Adrian?
no, certainly since the end of February, certainly, in the last month, silver has outperformed gold, as we know, and the silver stocks have done basically the same as the gold stocks, which in a way is not surprising given that most, as we've discussed, most silver stocks are really gold stocks in disguise, or pretending, but they're gold stocks pretending to be silver stocks. Um, and we've mentioned names before. We don't need to repeat that, but I think everybody knows that. But silver has actually outperformed gold in the last 6 weeks,
Yeah,
and that's sort of I think that's a reflection partly of the high price of gold. So obviously, when the gold price gets too high, people who can't afford 1 ounce of gold can easily afford 1 or 2 or 3 ounces of silver. So you see
right.
that kind of shift, and also it tends to be the more speculative metal. So yeah,
Yeah, you're right.
and so yeah, it would not surprise me if we see a bit of a pullback. We got a bit of a pullback today, not much. What's gold doing right now? Gold is down $5. It wouldn't surprise me if we got a bit of a pullback, but I don't think we're going to get a deep pullback simply because of the nature of the people who are in the market. If you're a wealthy Middle Eastern family concerned about the geopolitical situation, you want to protect your wealth, or if you're a central bank in Uzbekistan or wherever concerned about the US stealing your assets, you're not going to take profits because it's gone up $100, right?
Right.
Or $200. So I don't think we're going to see much of that. What with the big positive, I mean, I've mentioned that retail people are not in the market yet. They've only just begun to get back in. The ETFs, astonishingly, are still seeing outflows.
Yeah,
Gold funds are still seeing outflows. There's no mass move into gold, which is astonishing. But from a contrarian point of view, I mean, my gosh, what could be a better setup than this when in fact we're not seeing institutions, retail rush into gold? I think when we see the broad market, and we look at the gold stocks and the silver stocks,
right.
talk about them in conjunction. They've moved up a lot in the last month, no question. I mean, what is it, 30% or something? They've moved up a lot, 26%. They've moved up a lot in the last month. But the XAU, which is the index I tend to follow or I use as a benchmark, the XAU is still lower than it was a year ago.
Oh, so there's lots of room
It
still
was
to
two
move.
years ago. It's
Yeah.
still lower than it was 3 years ago. And of course, we all know it's significantly lower than it was 10 years ago. So this move has only just begun.
Wow. It's very exciting to see what's happening in the precious metals market, especially when so many people, like what you said earlier, Adrian, they're all the broader market is not putting their money in precious metals yet. They're either in AI or something else. And now online, there's a lot of people talking about when will this commercial real estate crisis with the banks, when will it unravel? You said they'll keep kicking the can down the road, but how long until these unrealized losses from these banks like Bank of America, how long until they have to become realized? Like how crazy is that once that happens?
Well, absolutely. It happens when they have to. And that is either there's a default or a bankruptcy, and they have no choice but to write it down. Or frankly, when I'm not a fan of regulators, so I hope nobody takes this as I'm asking regulators to do something, or when regulators say to banks, you need to mark these down. But
Mm,
I think more likely at this point, because there is some concern about not the big money center banks, but there's certainly concern about some banks in the US. I think it'll only happen when they have to, when there's a default. And it's also private credit. You look at private credit, which is a market that has grown enormously over the last decade in the US, but also in other countries. And basically, with private credit, they're making private loans or private equity,
Right.
and they mark, but they decide their own marks. They decide their own valuations. And in the case of some companies I could mention, like Gladstone Capital, which is a BDC that lends money to small businesses, Gladstone Investment, which lends money and makes equity in small private companies, they use S&P to determine the value of their loans. So they're using an outside firm, and many of the BDCs do that. But an awful lot of them don't, and an awful lot of private equity does not. They decide their own valuations.
Right.
Well, if you've lent, 100, whatever, if you've lent, $1 million to a small business as a dry cleaner or something, you can just make up excuses why you want to keep it on the books at $1 million.
Yeah.
It'll come back. It's a temporary thing. You don't have
Exactly.
to change it. You don't have to change it until they stop paying you back the loan, right? Um, and equity, of course, is even worse because they're not making payments. So yeah, there's a lot of, in my view, there's a lot of fragility in the system, a lot of underlying concern that is not seen on the surface, but could easily collapse, if you like.
Yeah, well, just looking even Adrian at the US dollar, how much it's depreciated since its conception. People have been saying it's 96, 97%. The US dollar has been devalued since its creation. So you only got a few percent left before it's before it's
Well,
just worth nothing.
let me tell you that the 98% or 97% is since the creation of the Federal Reserve,
That's 1913.
which is, it's since the creation of the institution that was meant to preserve the purchasing power of the dollar. That's when we've lost 97% of the purchasing power. So yeah, but of course, you know your math as well as I do. If you're down 97%, you can always go down another 90%, 7% from there.
Yeah, it's crazy. It's just absolutely crazy what's happening with the US dollar and the economy. And Adrian, before you go, where can people connect with you? Where can they read all your stuff?
Yeah, the best place would be adrianday.com. And that talks about the newsletter that we have as well as the money management that we have.
So they can go to your newsletter, sign up right from your website.
Correct.
Perfect.
Correct.
I'll put all
Adrian.
the links. I'll put all the links below for everyone who's watching. They can just click on Adrian Day's website right below. Adrian, I want to thank you so much for coming down to Wall Street Silver. It's such a huge pleasure having you come down. And hopefully in the future, as the market develops, we're watching really closely, what's happening with silver and gold. It's getting really exciting. So I'd love to have you back on.
Yeah, no, great. I appreciate it. Thank you
Awesome.
very much.
Talk to you soon.
Okay, thank you, sir.